AI Media has seen its business transform over FY26. Technology revenue has grown to now represent 74% of total revenue, while service revenue now represents 26% of the total. Meanwhile, total revenue for the AI translation and captioning company was down 7% to $60 million. The company, which sits on almost $16 million in cash, will deliver FY27 guidance later in September. Well, to get across those results, Juliet caught up with Chief Executive Tony Abrahams.
I think the highlight of the full year results was really the second half, because in the first half we deliberately invested in getting all of our products up to the AI-native environment, and principally that was with our core fleet of captioning encoders. And these encoders sit at the point of broadcast, and this was the first upgrade that we had done in 10 years. So we resolved 37 fundamental security flaws across that architecture. And so we've got brand new AI-native encoder platform. We will begin shipping those this half. But all of the investment in getting that done, about $3 million annualized, is in the rearview mirror now, which is good. So we spent $7.7 million in the last year on R&D and product development. We expense it all, right? So it's a completely clean balance sheet. We're still cash flow positive. And we've taken our foot off the gas in terms of that level of investment, because we've now built out the next generation AI-native encoder platform, which is the hardware encoders. And then the other thing that we've built, which is even more fundamental, is a software encoding platform called Lexi Direct, which effectively turns somebody else's hardware into an encoder and allows Lexi to sit inside somebody else's broadcast walled garden. So for example, Grass Valley have an AMP playout system. We are now natively embedded within Grass Valley. So if someone is a customer of Grass Valley, they can then select to pay for Lexi via their Grass Valley tokens. So it's about really getting Lexi out of just a hardware delivered broadcast infrastructure into hardware and software, and then taking it outside of broadcast, putting it into education and putting it into government markets.
So with that in mind though, total revenue was down 7% because of those legacy services and hardware both declining. So how do you convince investors that's a deliberate mix shift and not a demand problem?
Oh, well, I mean, great question, right? And they're two different things, right? So the legacy services business was something that AI Media needed to do for the first 20 years of AI Media's existence, which is effectively to have a human in the loop of like a live broadcast workflow correcting the AI engine from its live text. Now, we've been transitioning out of that human in the loop service since 2021, and this is the business that we actually shut the gate on in December of last year. So we're very confident that that revenue decline has ended, because we're not offering that service anymore. And instead, we're offering a service that's 80% cheaper to existing customers. Those existing customers like Channel 9 and Channel 7 have seen a revenue decline, right, over that period. But now that decline is over, right, we're now starting to see that engine of SaaS growth, which is principally through that Lexi text application still. And that was up 42% year on year to 34.1 million. And so just by virtue of the fact that that's now a higher base, services has come right off. We're expecting total revenue to grow. And the second piece is on hardware. So hardware was down 6.4 million, but it's down 6.4 million because we haven't shipped the new encoders yet. So we'll be shipping the new encoders this half. And so people are just holding back a CapEx decision that they make once every 5 or 7 years until they've got the new iPhone, basically.
Now, I have to ask you, Tony, what you think the market is missing given the share price depreciation. So down over 60% in the past year, lost roughly half its value just in recent weeks. So what is the market potentially missing here in your view?
Look, I think there's a lot of uncertainty around AI, who's going to win in AI, what companies are going to benefit from that. I think what people want to see is that we're successfully converting not just our legacy human services business across to Lexi, but we're also able to then grow that Lexi suite of services with the existing broadcasters that we've got. Now, 55% of our total revenue comes from just one sector, which is North American broadcast. And those North American broadcasters are spending more and more with us every year. So what we're trying to do is we're trying to increase the range of AI-delivered services that we offer these broadcasters by adding in Lexi Voice, which is live voice translation into your workflow. We tested that with the World Cup. English into Spanish, Spanish into English worked really well. So, you know, this is something that we see in coming years, more take up. But also we've released recorded media products so that we're delivering effectively that same level of automation for live. We can now deliver for recorded. And we've got a Lexi audio description product that automatically describes the content of the video for someone who's blind or low vision. And these are all brand new products that we're just launching this year. And the fourth element of the growth strategy is to then commercialize these other aspects of the Lexi suite, which is really going to be a key proof point to see, can we grow our share of wallet with these great customers.
But Google, 11 Labs, XL8, they're some of the models sitting under Lexi. So what stops one of them moving up the stack and competing directly with you?
Oh, that's a great question. So yeah, we use a whole lot of AI tools in the workflow. What effectively we do is we have a box that sits in the workflow and then processes the video as it comes in, merges it with the AI engines, and then outputs the video in the right format for video distribution. So really what we're doing is we're using kind of old school video distribution, merging that with new AI tools, and then presenting a synchronized final video for the output. That's typically not something that someone who's making an API is going to do.
You mentioned there as well that America Broadcast is 55% of full year revenue from essentially two products. So
Yeah.
How exposed are you if one of those contracts churns or there's renegotiated pricing?
Yeah, it's a great question. Look, we're in a pretty fortunate position that the business that we acquired in 2021, which is called EEG, has had a virtually a lock on captioning, encoding in the US since 1980. So it's effectively developed the gold standard, and almost all RFPs now use our equipment as the defined standard by which they're going in. So absolutely, if we see churn, that's a problem. We haven't seen any churn in our top 20 customers in 5 years.
Which is great news.
Yeah.
Now, when we look as well about some of the Lexi Voice commercial proof points, so I think you mentioned City of Sacramento, there's also Taiwan. What has to happen in full year 27 then for those pilot deployments to really translate to real dollar return for shareholders?
Yeah, look, I don't necessarily think FY27 is going to be the year where voice itself, right, like hits it out of the park. It took LexiText 4 years to really reach that commercialization process. We're 18 months in on voice. It's probably going to be an FY28 or an FY29 kick with voice, because the voice technology is still lagging the translation technology a bit. We can't quite get that same level of emotion that someone who wants to watch the World Cup in a native language is going to be able to replicate. But the Taiwan example and the City of Sacramento example are great examples where you already have product market fit in more kind of niche situations. The Taiwan example is news, right? So what I was talking about before was sport. People who want to watch sport, they want to feel the emotion. People who actually are in Taiwan, the use case, believe it or not, was they wanted immediate access in Chinese to Donald Trump's press conferences.
Because they probably get blocked otherwise. All right, now with that in mind, and you mentioned there you don't think it's going to be a full year 27 story necessarily, you haven't given explicit full year 27 revenue or earnings guidance. So what would you say to investors or Ausbiz viewers who are very heavily, into investing here that you want a shareholder to watch more closely over the next couple of years as you do look to get back to some higher levels?
Oh, look, I mean, look, we're still in blackout now, notwithstanding that we've released results because we've got the AGM in 4 weeks. So we've pulled the AGM up in the calendar. We've actually got some really exciting detailed product announcements over the next 4 weeks, and part of the AGM is going to be an investor day where we demonstrate those products. We're going to have a lot more explanatory videos about how these things work and how they're deployed in our customers' workflows in a way that I think will bring to life all the work that we've been doing in the last 12 months.
And so you're quite optimistic about the next sort of year forward?
Yeah, I think, look, the proof points have been are customers going to want to upgrade to the new encoders? Yes. Do they want the capability for voice going forwards? Yes. Are they ready to deploy it right now in a workflow? Mainly no, but they're definitely interested in continuing to look at where the envelope is of this AI technology, so that can we engage viewers who speak Japanese who want to watch American baseball without necessarily having Japanese commentators. Now, there's still a little way to go there. It's probably 18 months.